hello, we will retire to the United States stock market before March 29th. We will start a special broadcast for retiring to the United States stock market. Today, we have gathered Representative Kim In-jung, a man who comes to mind every weekend. Hello, Representative. Nice to meet you. Nice to meet you. It feels like it's been a long time since I've greeted you, Representative. It feels like that. But when we started broadcasting the recording last time, the United States market was still under adjustment, and that adjustment is still not over.
For quite a long time.
The market is fluctuating quite a bit. Today, we are planning to proceed with the United States Stock Elementary School program, following the last broadcast. If so, in such a volatile market, we have to avoid a bit, the risk is a bit larger. We plan to continue to proceed in the order of encountering such a category. Before that, I have one update news that I would like to share with the audience. We usually compare a lot between ChoisStar and Staking Alpha, but Mi's own family members seem to use Staking Alpha a lot because it has a function in Staking Alpha, but if there is no ChoisStar, they seem to request a lot from the representative. Among them, one representative example is that in my case, there is Mi's own top pick, and although I can't enter top pick, I have a category of interest that I personally care about and continue to follow. So I have two separate portfolios, and now there are cases where I monitor how each stock is changing. But I'm interested because a similar feature has been added to ChoisStar this time. Could you please explain a bit about this new feature that has been added?
Yes, actually this is a service that was created because our viewers, including Ms. Hoon, requested it, and it's one of the features that many people have requested through our channel chat and such. So we have our own interests, and it's nice to see the buy and sell signals at a glance, but as the number of interest keeps increasing, I've heard somewhere that there are stocks that I own and some stocks that are left as a back view. When I saw that these stocks were all mixed up, there were continuous requests to separate these things a bit, so we set up development schedules for those parts, and we worked for about 3 weeks and finally reflected it. So, I'll briefly explain how to use that part of the screen, and I'll try to start a little bit of elementary school today. Can you see the screen? Yes, I can see it well. Yes. If you look here, now the interest type section is now in this area, and now I've put all of the S&P 500 here, and I'm doing it continuously, so there are a lot of companies, but if you look here, it's also called interest type feature upgrade. So now there's a banner at the top like this, and if you click on it, we've organized it like this in card news to show you how to do it. So I watched the broadcast and I don't understand it well. So if you click on the top menu like this, you can create a group of interest like this. You can modify the name and you can delete it, and it would be nice if you could take a look at it for now. And if you actually go into our interest category on the screen, I will create one more group like this. I saw it. So Mi Ji-hoon is a top pick, so the representative is also a top pick. I also have to try it once, and now I've just created a group and haven't registered yet. So I'm going to explain how to register this part. For example, for instance, if I click to add a category that I'm interested in, such as Nvidia, you can see that it's already marked with a heart at the top here. This means that I've already set it as a category of interest. But if we want to do something more with this category, no matter what it is, we just have to click on this heart one more time. A pop-up window like this appears, and for now, it's only checked in the watch list. Then, if you also want to add this to the midterm top picks, check it and press confirm, then it will also be added to the midterm top picks. You can decide whether to put it in one group, 3 groups, or all groups when you click on this heart after selecting a certain stock. So you can manage it that way. Next, if you click on add and you want to add another group, you can add the group name. I will set aside one as a regular stock. I believe there will come a time when we need to be regular in the market. When our market score is 35 points, we really want to buy, and we will mention it with patience. But why don't you recommend like this these days while waiting for the score to come? There are people who say that, but we haven't been recommending for a month now. Our opinion is that it would be better not to buy now. When that point comes, we are checking each and every stock that will be bought and introducing them one by one through our YouTube channel, Mitpan TV. I have now set aside stocks to pick up in a new category called Stocks to Pick Up. First, let's check. As I mentioned last time, among the companies I introduced then, Duo Aramco is a really interesting company.
I really like it.
Our child recently said they would study Spanish for 5 minutes a day during their free time, and they installed this. They found it more interesting than they thought. So that's why there's some sort of minor movement in the traffic. I had such a thought. So I thought if I press the heart here and add this to my favorite stocks by categorizing it, this category will be included. And if it's of interest, it will appear on this grouped screen. Then if I press on my favorite stocks, it will come up here with only one rolling and it's still in observation. It's showing me like this. So we've grouped it so you can see it on mobile, and now on the PC screen we're going to develop a PC screen later so you can see Korean stocks, United States stocks and so on. At that time we will make it possible for you to see more diverse indicators than this. On mobile it's too complicated to cram everything in there. For now you can do functions like drawing and removing the purchase signal and interest type, and from here whether it's a stop loss or something. Inside this, there are functions that can sort from top to bottom by type.
Available. The sorting.
I've completed around 50, so placing it slightly higher would be great for better alignment.
If you want to come down, shake it.
There is a number. If you enter into group management, I want to change this group name, not to the average top pick, but to the average top 10. If you want to change it here, it will be done. If you say it's top 10 like this, you can now change the group name too. Or if you just want to delete it here, then you can press here to remove the minus button.
It's there, so
If you press here, it will delete everything. If you throw a confirmation message again, it will all go away. The one that was in that group inside that remains in a different group. So if you apply it like that, it has a function that allows you to see the signal of various interests in this grouping, so it would be great if you try it once. I mentioned it last time too. Since the Android app is well communicated to everyone, please get the Android app, and now our iPhone app is also under review.
probably in April.
I think we can introduce the final version around the end of April. That's good.
It seems like a very useful feature has been added this time, so I think I should try using it right away. I mentioned earlier that I even had a part-time job in skating, but besides the top pick, I have a folder where I only collect software categories, and there's a group, and I also have a hardware-only collection, and now there's a separate category of interest. So there are a lot of cases where I upgrade from the category of interest and go into the top pick. I think this feature can be used effectively if utilized. Now we're about to move on to the prepared United States Stock Elementary School lesson for today, and it seems like the most important topic at the moment. Why? Because from the perspective of a person who is affected by the adjustment of United States stocks and from the perspective of an investor, it seems to be going very slowly. But in fact, if you calculate it, it's been a little over a month since the adjustment came out. Yes.
So,
I'm extremely tired and I'm hoping this will end soon, but I honestly don't know when this situation will be over. Another important thing is that it has dropped 10% now, but in fact, no one knows whether this will drop to 15% or even 20% based on the S&P 500 standard and go into a bear market. So from the perspective of investors, it's important how much profit I make by choosing what kind of stocks. But I think one of the very important investment strategies is to remove or reduce the weight of high-risk stocks when the market is not good like now, thereby reducing losses. Thank you. Last week, we had a lecture on selecting high-risk stocks while looking at our business and performance indicators. What will you talk about regarding risk today?
Yes, when we first started, we talked a lot about 4 ways to reduce investment risk. First, we talked about the risk related to the company's finances, and then about how to check and mitigate the risk that future performance may not occur as expected. Today, I will talk about a method that can be widely used and is useful not only when selecting initial growth stocks, but also when weeding out unstable companies in a cash flow check reducing risk by checking unstable companies in cash flow. And next time we will talk about companies where risk arises because the valuation is too high due to overvaluation. Next, even though our target is fine, the market itself is just adjusting, and we may fall down as well. How can we reduce the risk that we can't avoid? I'm going to talk about 4 things in total, but today I will focus on the cash burn and try to explain it. That's good.
Speaking of cash flow, there's one company that comes to mind. There was a time when I was in the United States, and among all the stocks that fell, there was a category called super microcomputer. There were several reasons why it was the biggest when it was excluded from the top pick, but the sales report was decisive, wasn't it? The performance was good, but the cash flow was negative. So
At that time, I refer to.
there is a deficit, but today a very important topic seems to be prepared. So I need to calm down and take another look. If so, please share the prepared slides. First of all,
Now, with the super mic, the computer,
you were talking about, and just now,
you've tried it once. Then, if you look here from the total score, our current cash withdrawal capacity is.
Showing up here, right?
If you look, it's done like this and it comes out as 0 points. So a person checks our current points and all the points that need to be checked, and then the robot calculates all of them and gives them to us. The business is very safe, profitable, and doing well overall. However, having 0 cash withdrawal capacity is extremely uncommon. Despite challenges, it usually increases by 10-15 points, offers high profitability and future growth potential, but lacks cash withdrawal capacity. In such cases, it's extremely rare, so it's very good to be a little suspicious and watch it. From that perspective, the cash flow statement section we're going to learn together today will be quite helpful in many ways. I will proceed to today's lesson right away. Then now I will hand over the presentation. The riskiest thing for our company is that the biggest risk occurs when the debt is bad. When we usually talk about if a company goes bankrupt, isn't it that the debt goes bad? But in fact, even if the company goes bankrupt, the debt does not go bad. If a company has cash and can keep rolling that cash in any way, it doesn't go bankrupt. And when it does go bankrupt, it's ultimately because it can't roll the cash, it can't pay. That's what happens. Among them, we usually think of red ink as bankruptcy, but we need to be careful about companies that are in this black ink bankruptcy state. Black ink means we are safe and only looking at the profit and loss statement, but these companies can also be very risky. First of all, I would like to emphasize that this should be checked in the cash flow statement.
And now?
Let's get into this cash flow statement in earnest. Then, for those of you who are in elementary school, this is one of the topics that you find extremely difficult. Financial statements were the most challenging to comprehend during class. When I first studied them, the terminology was complex, the words were lengthy, and the accounting was difficult. But as long as the investor knows the basics, that's all that matters. We're not trying to become some kind of accounting expert, so it would be good if you could just focus on which parts need to be focused on. So before I explain this screen, it would be great if you could focus a little on what I'm saying. That is, we have a cash flow in the company, but in the household, our cash flow is extremely important. So when we think of ourselves as generally employed and receiving a salary, if you think about what kind of cash flow an individual has, the most important cash flow is immediate expenditure. The money I earn through my basic most important activities, such as providing labor and receiving compensation for it, this cash is the most basic cash, and in a business context, this is referred to as operating cash flow. So it would be great if you could remember this part first. Secondly, if an individual can have another cash, I have deposited some money, in which case the money comes in from the interest, or I send out money to deposit or invest in stocks. These are the forms. There are activities where money goes out, and these are mainly related to the activities of individuals investing. Finally, if there is a cash flow that applies to individual cash activities, neither this nor that, there is no money. I was attracted to luxury, but I spent all my salary in a week, and I also sold the stocks I had, but I spent all the cash, but I still don't have enough cash. then this has to be borrowed. So this is either borrowing a loan, begging from parents, or begging from friends. These activities have to be borrowed, but companies call these activities operating activities. So these three things exist for individuals and the same things exist for companies. Remember this first, and I will go back to the diagram and try to explain it again. So if you look at this screen, in the case of individuals like us, those who do business, such as renting or such, business registration occurs. These things, from a business perspective, are very fundamental products that are made and sold to generate money. We call this money coming in from business activities.
Business activities.
We call it cash flow. And now it's a long journey again with a Korean name, so to speak, a very long journey of cash outflows from business activities.
We use it. Then
Now, as I read that financial statement, I can't see this cash flow statement anymore, I think. Just understand it as business cash. The cash related to the main business coming in and out is called business activity cash flow. From an individual's perspective, self-employment or business income can be considered business income. And in English, it's called cash flow from operating activity. Here, operating means the basic activities of running a company. And because it's the money earned from these activities, it's the activities where the company makes goods, creates services, sells them, and profits come in, and therefore money is left over. This is the most important activity. So operating activities, the flow of money, and then individuals saving and investing. What is this? From a business perspective, in order to grow, service industries also need to do things like servers these days. They have to make NVIDIA servers, buy chips and so on, like Google, although it's a service industry, they originally have to buy things like servers rather than factories or such. These things become investment activities. These things, on the cash flow statement, it's written as cash flow from investment activities, inflow and outflow. But if you just think of it as investment activities, cash flow, it's fine. In English, it's the same at the end and it's expressed as investing activity. Lastly, the third one, this is not both cash flow. When some money comes in and out, that's why I can borrow from the bank, borrow from a friend, borrow from my parents, or even lend. Just like all these activities, companies do the same. You can borrow money from banks or shareholders, and if you borrow money from a bank, it is written in an item called debt capital. If you borrow from shareholders, this is called equity, so if you borrow from a bank, it goes into debt, and if you borrow from shareholders, it goes into equity. But anyway, these are all business activities, finance activities, financing activities. So, on a company's cash flow statement, there are only these three activities. Just remember this and you'll be fine. And at the end, I mentioned the concept of cash flow or free cash flow, which is not a difficult concept. But if you know this concept, the problem ends simply afterwards. So remember this cash flow statement, these three things. I didn't do my homework while I was in elementary school.
well, I've been saying this, but this time,
There is homework. On the cash flow statement, there are operating activities, investing activities, and financing activities. You should memorize this. What kind of activities are there on the cash flow statement? But it's business income. You can't say it like this. There's cash flow from operating activities, cash flow from investing activities, cash flow from financing activities. You must know this when you first start looking at the cash flow statement. And then secondly, if you remember these two things, 90% of the cash flow statement interpretation is done. First of all, there are these three things, and what this means is that you should have interpreted it first. What's the second? In the cash flow statement, the sign is very important. So is it a plus or a minus? In our general balance sheet, there are hardly any minuses, but in the cash flow statement, whether it's a plus or a minus is very important. But we usually think that plus is always good, right? Black is plus and red is minus, but in the cash flow statement, there are times when plus is good and times when minus is good. So now we need to remember how to distinguish that. You might think it's already hard on your brain, but I'll try to explain it simply. It won't be difficult. The second thing you need to remember about the cash flow statement is that it views the inflow and outflow of cash, and when cash comes in, remember it as a plus, as in it's coming in.
remember, it's going out.
Record it as a minus when it goes out. If you get confused, it won't work. Cash flow is black, so it's not a plus. It's when cash comes into the company, so it's left over, so it's a plus. When cash goes out of the company, if the activity is like this, you should see it as recording it as a minus. In our profit and loss statement, if it's black, it's a plus. If it's red, it's a minus. This is the concept of recording and a different concept. So, in the cash flow statement, if it comes in, it's a plus. If it goes out, it's a minus. If you remember this, you've understood 90% of the cash flow statement. Then I have a question. Now, if you look at the statement carefully and can guess whether the activity I'm talking about is a plus or minus in cash flow, you can say you've almost graduated from the cash flow statement. I will try to ask a question. The company, Apple, has decided to invest in artificial intelligence late and buy servers, chips from Nvidia for about $100 million. What is the first activity, and is it a plus, a minus, thinking like this? Then, is it the first business activity, investment activity, or operational activity? Apple purchased servers to grow. It's not a business. A business is something I have to sell seriously. Then what is the answer? It would be investment activities because you invested for future growth. So for now, you're half right. So Apple doing that is investment activities. Well, and the second one for Nvidia, is it recorded as a plus or a minus? If Nvidia brings a server, should they give money? Should they not give money? They should give it, right? Giving money from a business perspective, is it coming in or going out? It's going out, right? If I give money, is it a plus or a minus?
Minus.
Minus, then it's over. This activity, what does Apple's financial statement record? It means that they record a loss of $100 million in investment activities, saying that the company has invested $100 million for future growth, and you interpret it the other way around. As I mentioned the first time about the financial statement, interpreting the financial statement is not about looking at the numbers, but understanding the activities with those numbers. So when you see those numbers, you realize that they have made investments and they are betting that the company will grow significantly in the future. That's how you should see it. I will ask just one more question. Shall we take Apple as an example again for the company? If Apple continues paying dividends at this rate, they may face a cash shortage. They appear to be attempting to purchase servers from Nvidia, but their available funds seem to be insufficient. So they were wondering whether to issue bonds to the shareholders with this cash or borrow from the bank, and then they decided it won't be a big amount. Let's borrow a little bit of $30 million from the bank. Then what is the effect of this activity? I will give you 5 seconds. Try to guess, then our listeners can also participate. Things like borrowing money and lending it are part of the job, right? So it's a business activity, but the act of borrowing money itself feels somewhat wrong, doesn't it? I mean, when you borrow money, does the money come in or go out? The money comes into the company, right? If money comes into the company, I said it's a plus. 90% of the cash flow statement is about figuring this out without getting confused. If you borrowed $30 million, you'd record it as a plus $30 million in business activities and $100 million in investment activities. If you do a lot of investment activities but run out of money, you might say, I borrowed $30 million. Once you start understanding the numbers on the financial statements, your perspective on the balance sheet or income statement in front of you will become much more sophisticated. That's why this concept is the best way to solve 90% of the cash flow statement. So it would be great if you could take a look at the actual situation of the companies you are investing in. I've already organized the screen a bit earlier, so I'll just go over this simply. So in business activities, cash flow, the most important thing is, I said this is the main business, so you must always record a plus. You must remember this. There are 3 types of cash flow activities: operating activities, investing activities, and financing activities. You must remember this first. And if cash comes in, it's a plus. If it goes out, it's a minus. You must remember this. So, in the main business, of course, cash should be left over. So you should receive a salary and spend all the money and still have a plus left. That's what I'm talking about. Of course, in business, cash flow must be a plus in business activities. This is the most important point when checking the cash flow statement. This one must be a plus. The second investment activity is usually negative because the company continues to invest for growth. A negative cash flow in investment activities is normal. If it were positive, it would be unusual for a company. Don't worry if your finances temporarily show a large influx of money from selling something or disposing of investment assets. It's usually a temporary positive balance that quickly returns to the typical negative balance. Then how does the business activity go? Generally, if dividends are paid, it becomes plus dividends are paid. When a company has substantial cash reserves, negative cash outflow from business activities indicates that cash is leaving the company. Think about how the company's cash goes out not only in business activities but also to shareholders or creditors. There are two things. One is when you borrow money. Cash goes out when you borrow money, so this is when financial activities go negative, and another is when you pay dividends to shareholders, then this goes negative, and if you do a lot of activities for shareholders like buying back shares, etc. Of course, in international financial reporting standards, this is treated as both business activities and financial activities, but generally it is correct to treat it as financial activities. So compared to that standard, it seems like most of it is being treated as financial activities. So, what you all need to remember is that it's recorded as business activities plus, investment activities minus, and financial activities minus.
This much is.
I will make sure to ask you this during our third session next time.
Remember this.
That's why plus and minus signs matter. If it's minus, it results in a large volume. But the companies that are growing rapidly, what form do they take when they appear? Plus, minus, plus. This is how they appear. So they're making a lot of money in business, but they're investing a lot, so they can't cover all the money they've made here. It's a pity, yes, it's a pity. So it's not a problem because they say that business activities are a plus because they use a little bit in business or in the entrance. So as I mentioned earlier, business activities must record a plus, which is the most important, and investment activities are not very important. Almost minus. So next, business activities are either minus or plus, but growth stocks are temporarily plus, but things like Nvidia and Tesla were all plus in the early days. Later, as business activities and cash flow increase significantly, excess money is used to pay dividends to shareholders, changing this concept to a minus. So here the cash flow is a bit different, where this becomes the principal, and this can be referred to as value stock, volume stock. What I've explained is middle school level. It's good if you understand up to this point, but even if you don't, remember that in business, plus minus minus is a good company, and activities must focus on the plus. It's important to remember at least this much. In fact, I brought a balance sheet, a cash flow statement. If you look here, this is the screen that comes up when you search from the initial screen. There are three main categories to focus on: business activities, investment activities, and financial activities. The rest is less important. I'll explain it, but once you hear it, you'll understand everything. Business activities, investment activities, and financial activities. But if you look at this company, it has recorded a plus in business activities until 2019, which is good. They are making good money. And if you look at the investment activities, they are all negative. And if you look at the financial activities, they are also negative here. So plus, minus, minus. This itself is not bad because it's a deficit. But suddenly in 2020, there's a minus of about $110 million in business activities. A deficit appears, it starts to bleed from the main business, it immediately turns around, then the red light comes on right away. Investment activities can't be done anyway, so it's a deficit, and this money is not just accumulated, the company has a hole in its business activities and there will be no cash flow, so naturally there can only be a plus in financial activities. If this is lacking, it should be filled from here. We individuals are the same. So this lacking money was pulled from the finance of $130 million. Then where was this finance pulled from? So this is a middle school process. But if we go to the first learned financial statement and see whether the debt has increased or the capital has increased, it will be seen. So if the stock price has increased, you can see it has brought through the increase, and if the debt has increased, you can see it has brought $130 million through the debt. So it was caught in the debt when it was over $100 million. So as I mentioned in the first hour, the financial statement is not a separate screen, but is connected with the balance sheet, income statement, and cash flow statement. And then, if you look at it, the business activities continue to be in the negative, and as a result, the financial activities continue to be in the positive. It's a system where finance must continuously provide funding because the business generates no cash. And as you see, this company is gradually becoming insolvent. And if the cash is no longer available from financial activities, you start to think that you may have to declare bankruptcy or liquidate. The case that needs to be careful at that time is the actual case, and it is interpreted as a company that is still listed as of December 31st, 2024. Because I captured the company where I am listed, I will not reveal the name. If you interpret it like that, it would be okay. Please look at it a little like this. So we draw this on the chart and show it to you. This is now going into the financial chart, but we made a financial statement into a chart, which we call our financial chart. And we even made a brand, but only I use it and no one else does. I named this chart as a financial chart, but originally I called it a big chart, but no one called it. So now
I became the owner, but why?
did I call it a big chart? B is talking about the balance of the current situation. I is talking about the Sonyan champion of income statement. And C is
The statement of cash flow.
so I've been doing well in my own way.
Considering it from a broad perspective.
I decided to do it, but no one else was doing it. So I decided to use a business chart instead. We're using a business chart now. But anyway, this business chart shows these three things in a timeline like this. We're providing a service that shows this. So if you look here, the way to see this zero as the standard is to think of the money flow above as a plus. I mentioned earlier that the sign is important.
After that,
Based on this zero, if below is negative, then if you see the number in front, there is minus 2,200 zero, and here is plus 22,000. So based on this standard, the current business activity, which we call business activity, should be above this plus, and the financial activity should be below this zero. But if you look at the case of that company earlier, it's still maintaining a minus as it has crossed over to a minus state at this time. On the contrary, we can see a situation where the financial activity continues to be a plus after crossing at this time, continuously filling the company with deficient cash, and the company is going on annually.
that's right. Yes, it is.
So even if you look at this cash flow chart, it can be very useful for you to make judgments, and you can judge the changes in the time series. But I find this a bit difficult. Remember, I showed you the super microcomputer types at the very beginning.
There, the cash flow chart.
Companies that show a zero on the chart or this type of patterns, either 0 or 10 points, you should be cautious. At least that's how you should understand it. If you're in primary school, understanding up to this point is sufficient. I don't think I'm a primary school student yet, and I'm about a 1.
Second grade 5.
Not 5, 6th grade, but about 1, 2nd grade, then it would be helpful if you could utilize your credit score a bit, and even if you take that, at least reduce the risk a bit. It seems like it would be a lot of help. What I want to say is not the answer to long-term investment. If you invest long-term in such a company, this company is still alive now. It's still alive, but now, for example, it's $3, so I'm going to buy it now. It's too cheap. It's too cheap, so it's good. But if it becomes $1 from $3,
That's also tremendously.
it falls a lot. If you look here, the fact that the historical stock price was almost $170 on the 20-day moving average or 60-day 121 line, it's a stock that had exceeded $200 in the current price, and that stock is now at $3, $4. Then, during this period, the currency depreciation has already collapsed, right? If the currency depreciation has all collapsed, then around that time, the screen I showed you earlier has already started to collapse from 2020. When operating, it was converted to minus. And if you look here, it was converted from here earlier. This is the stock chart of this company. This is the stock chart of this company. But this was converted to minus. And from this time on, something is strange about this company. You have to catch it with your eyes. And then, even though this continues and continues, it's reckless and, oh, this is going to make the stock price go up again, it's going to rebound again. And around this time, all sorts of themes start to get heated up. So if this company does some sort of restructuring or sells somewhere, it rises by about 60-70% in a day. So, if you enter the market thinking, I should try this once, and if it fails, you might lose about 50% in a day. Because of these patterns, it would be better to avoid such risks a bit. What I see now is that we will show you a way to dissolve an insolvent company on our actual site.
And as always,
If you look at it in reverse, what other ideas are possible? Earlier in this chart, we had companies where our business activity cash flow turned negative, but on the contrary, there were companies whose business activities were negative and then turned positive.
that's what I mean. So
Companies like that become a significant investment point. So, not only are treasury bills used simply to hedge against failing businesses, but the changes in the early stages of a growing business, or the changes in the early stages of a turnaround business, move much faster than the order of profit and loss statements. So check the treasury bills first, and I will explain with an example on my actual site how you can quickly see a company where these treasury bills are improving. Then let's load the site again. A company called Carnival, a famous company. If you look here,
Carnival, as I mentioned earlier,
it's a bit different from him. So, the current withdrawal power is of course 100 points, but now it has started to make profits and the stock price has fallen a lot to $8 in the early stage, but now it has recovered and the stock price has risen a lot. Now it is adjusted to $20. So, compared to the low point, it has risen a lot, but where to catch the point that it will rise is the question. But now, the reason why Carnival has relaxed a bit is because why? Because of Corona, in fact, the demand for travel has decreased and it has exploded. So when Corona ends, or after Corona ends, it is not a company that grows tremendously. If you only do the sales performance of one place, at least until the broken market recovers the travel demand as it is, you will see a tremendous V-shaped rise, and during that V-shaped rise, the stock price will recover at least half to 80% compared to the high point. Then, compared to the low point of about $8, $10 the stock price can at least double or triple, and if it's a lot, it can go up to 4 or 5 times. But when will we start that point? If the province buys it due to lack of funds, even if you've invested, you can fail. I'm saying it would be good to look at this cash flow statement well at that time, and I'll try to actually press this from the cash flow statement and try to show it once. Go into the business here.
if you look at the finance,
If you go into the finance and look at the bottom, you'll see it's called a cash flow statement. And if you look here, this Carnival used to make a lot of money in the old days. If you look here, based on the annual basis, in 2018 and 2019, they consistently made this much cash flow, around $50 million. But suddenly, if you look after the outbreak of the coronavirus, this company
from this point, it's been tremendous.
started turning negative. If it goes on like this, it will fail.
That's right, the company will.
Since we're running out of cash, where should we cut back? In business activities, right? So obviously look under business activities. Look here, everything is in the plus, right? So it's a transition from minus to plus. Then really most companies are going into debt. But when it comes to Carnival, when will you invest in such a company? When will you invest in the company in front of you? Even if it goes to bankruptcy like Carnival, I don't think so. The reason is that it is because of the cash flow statement and the difference with it.
Then
When does she change? This part, if we look at our data from here,
now it's time to switch.
let's get started. On May 31st, 2023, cash flow begins to operate as a current business. So if you look at it from now, it's almost 2 years, 1 year and 10 months, right? About 1 year and 10 months ago, cash flow starts to convert its business activities into black numbers. And if you look at the operating activities, it now starts to turn into a minus. Here is,
Here.
and it changes to minus. Then, as business activities gradually increase like this, they go up gradually. The concept of the minus getting bigger means that the loan interest is being paid off, which means that the debt decreases, the cost of capital also decreases, and profitability improves quickly. So when I was this excited, I broadcasted on YouTube. I made $1.10 return, but what do you think is the limit? I wrote that. If the stock price has fallen a lot, the comments are not always good. I didn't drop the stock price, but it has fallen a lot. I think it's time to look at it differently. From a good intention.
I did it, but then.
What if it fails? I don't mean to disappear. Such changes in points are happening and such things exist. What will happen if more join in? That's highly unlikely to occur. Cash flow is essential in business operations. A company with remaining cash from income is preferable to one that constantly borrows money to operate. So keep going. But how do you know that, right? You don't know. We don't know the future, but when we see the financial statement, we can only make such a decision because the result of that decision is the financial statement. I explained that, but if the stock price falls a lot, it's not easy to convince the angry people.
Isn't it?
So, can you see this YouTube of ours right now? Yes, I can see the screen. This is when we shot it on April 1st, 2023, looking back at 2000. After seeing that video, I think we need to look at it a bit differently now. But now, if you look here, everything has collapsed and the stock market fell at the time of the corona outbreak, and now it's in the red. But when asked what would be good to do, I just threw out one suggestion. The first quarter business activities were positive for the first time. What does that mean? The possibility of turning a profit even with a black ledger is significantly increasing. Because of this, business activities and cash flow have improved significantly, so there is a good chance that the stock price will recover in the future. These discussions were held with the current cash flow statement in mind. So I appreciate the comments. There were people who asked such questions and there were also those who didn't, so I wonder if I should stop filming when I receive such comments.
I get worried.
I have a lot of such concerns. Even now, a lot of stocks are falling sharply, so we started to review the series we started last week about the blue chip stocks. And now I have listed the stocks that I can now put into my portfolio. If market score really says that you can't buy this, then you should start putting a lot of it in your portfolio. In terms of adjusting the weight of cash and stocks, this is something I will talk about a bit when I am reducing investment risk for the fourth time in relation to the overall market weight adjustment. So I think it would be good if you do it that way. So, if you look at this cash flow statement and look at the chart, there is a balance sheet in the middle. If you click on the balance sheet, there are annual and quarterly periods like this, and if you look down here, there is. Again, the business activities turned red and then turned black at this time. If you look at it over time, it turns much slower. So I want to see these things a bit faster. Then it's good to look at it quarterly, since the quarter is already fixed and goes over the period. So if we look at our data 12 quarters ago, in cases like this, as of the February 2023 settlement, the black business activities have already turned black by $38 million. This is marked and I wrote this as a symbol. So because of the transition of the Dragon Rider,
Continuing forward.
maintenance will continue and overall things like passive flora will improve as we reduce our activities, and after that the stock price recovered quickly. If we go back to the financial statement and see one, if we say we borrowed money earlier in the financial status statement, let me take a look at it over time. Over time,
If you look the money.
the parts where you pay and save eventually come down to this part of the car loan
Or the car loan.
or the principal. If you borrow from the landlord, this increases and the stock income increases. And if you borrow from the bank, this increases. In that case, these parts of the car loan have increased a lot over time. If you look at it in terms of time, it has increased a lot. If you look here, it increases tremendously and then falls again with these trends. We've been giving it for 2 years from here, and if we look at this data in our segmentation units, we can see that it's decreasing much faster. If you look here, 36, 35, 32, 31, 32, 30, 30, 28, 28 as it decreases. We give the interest rate So the interest expense decreases. And if the interest expense decreases, the operating profit rate increases, the net profit rate increases, and these things improve quickly. So up to the level where we receive the corresponding valuation. But it's not a growth stock, of course. It's an industry with gross domestic product growth rate plus a slight increase in alpha sales. When it breaks in such a temporary external environment, when you do a turnaround, it's good to look at the initial stages of the cash flow statement. So even in the growth stock market, as I mentioned, even when you're dealing with early growth stocks, even if the profits aren't coming in, the business activities and cash flow are going on for about 1 or 2 quarters in the cash flow statement. If that's the case, even if you buy with a bit of patience, the transition to black numbers is almost certain if you look at it this way. The cash flow statement can be used to recover a failing company, but for a growing company, even if the net profit doesn't come out, it can be an item that can be used to buy growth stocks a little faster. So if you practice well and try to master the cash flow statement this time, I think it would be good for everyone.
Every time the lecture ends, I always give a very positive evaluation. So even if I say good things this time, people might think that I'm serious like this, but I think today's lecture is the best ever. Thank you. Why? Because usually when I analyze stocks and look at fundamentals, I choose the type. Still, in most cases, whether it's the probability of sales or the profit rate, margin, and even operating profit, there are quite a lot of cases where I choose stocks while checking this level. But today, we have a very important opportunity to discuss how we can use the slightly less interesting field of money laundering. This appears to have two aspects. Firstly, we often talk about opportunities that we look forward to, like the carnival example we saw earlier. It would be nice if such things didn't happen again. As we continue to live and invest, we will also explore the bear market. There could be wars, diseases, and other crises, and then we might face a situation of emergency. In terms of crisis, it would be a great example if we could turn the risk we often talk about into an opportunity by investing in certain stocks during the recovery phase. And even if it's not such a crisis situation, we Koreans usually invest in growth stocks, just like me. So for those who invest in growth stocks, cash flow seems to be more important. That's why we need to look at this cash flow. The reason for investing in growth stocks is ultimately to invest while looking at the potential for growth. And if so, when determining which growth stocks have high potential, there may be as important an indicator as cash flow, which makes you think about this. I think growth stocks can be divided into two categories. The first one is a growth stock that seems to be more risky in terms of cash flow, and the other one is a growth stock that seems to have more potential when looking at cash flow. Did you explain it earlier with the diagram? Plus minus, minus is plus minus, minus minus. If you remember this, the cash flow from the business continues to increase, and then the cash flow from the business activities continues to show a minus. If such a growth stock is discovered, and if the growth story of that company is good, wouldn't it be a very high probability bet? I've thought about this a bit.
In fact, from the perspective of growth stocks related to cash flow, there are quite a lot of people who invest with cash flow in mind. In reality, there are some excellent books about finding growth stocks through cash flow analysis, but they can be quite challenging to understand.
Yes, cash.
Focusing on cash flow. But I wonder if it's okay to introduce this book. It's not our book, not even mine, but can I mention it? Yes, it would be great if you could tell us about it. There's a book called The Expectant Investor, written by Michael Mobson, which is about finding a growth stock in the current money market. I quickly searched for this book, and the first edition is out of print and is currently being sold in used bookstores for 85,000 won.
As well. Us?
We have a couple of them at home, but I'm not sure if we should do the South Tech or the North Tech. As far as I know, the latest account book came out recently, that's what I heard. Oh, is that so? Yes, it came out. Is the title the same? I'm not an expectant investor, but I'll look it up since I'm not an expectant investor. As far as I know, that book came out again recently with the same concept, but I don't think you need to buy it so expensively from a second-hand bookstore as an expectant investor. Good books are often out of print because they don't sell well. The more challenging and educational a book is, the less likely it is to be a bestseller. So even if I don't read the book, I feel like this is a good book and it's gonna be out of print, so I start by ordering it. If I keep my out of print books like that in the used book market, they can really go up to 200,000 or 300,000 won. When a book that was 15,000, 20,000 won becomes unavailable, it's hard to find it in its original form, and these people make the books quite expensive. If I find that, I will tell representative or let you know in the comments. The book that I know within my range will be a really good book if it is found with cash.
It's the same. How do
I found myself with a book from another company, unable to receive the commission and expressing regret.
investors' sentiment?
I strongly recommended the book anyway. That book does not lessen the difficulty for me in finding the bull market in the money flow and interpreting the money flow. It's hard for elementary and early middle school students to understand. It's definitely difficult, but as you all gradually progress, I've reached about the level of a high school student. When you do, reading such a level of books will probably be very helpful, and for those of you at that level, reading books will just connect your thoughts. I think those kinds of books will be suitable.
Yes, the title of today's broadcast was American Stock Elementary School, but in fact, the content of today is actually what I would call a middle school process, not an exaggeration. So far, we've simply said that if the cash flow turns from red to black, then you should pay some attention to that stock. We've understood it at this level, but if we break it down into three detailed stages, whether it's business activities, investment activities, or financial activities, we can understand the story of this company in detail. So it seems like we can understand this company. It feels greatly upgraded. I learned a lot today as well. Thank you sincerely for the good lecture.
Yes.
Thank you. Yes, with that, we look forward to examining the inflation risk and market risk at the next American Elementary School. We will end today's broadcast here. Such a wonderful lecture. I'm very grateful for today as well. I hope you have a joyful and relaxing weekend. Thank you.
I hope the rep enjoys too. Thanks.
Yes, thank you.
Thank you.